I just got my insurance bill. Wow, was I ever surprised. Now, of course, I knew it was gonna go up, but I was still surprised how much it went up. I'm gonna share all that with you. I'm gonna actually show you my homeowner's policy, show you what the premium is now, what it was a year ago. But first off, let me introduce myself. My name is Troy Funk, and it's Funk, F-U-N-K, Fun K. I am a licensed real estate broker here in the state of Florida. I have been in real estate sales. I have been a resident of Florida going on 40 years. And in that time, I have learned a few things, and I intend to provide you with some value today. And if I give you some value, I ask that you do me a favor and hit that like button, hit the subscribe button, and certainly that little bell so we can remain friends. So where am I right now? Just to start our journey, I am on Legacy Trail in downtown Sarasota. And I love this area, Legacy Trail. It'll make our conversation a little more interesting as we walk down Legacy Trail. Now, Legacy Trail is a bike to beach opportunity if you're thinking of moving to Sarasota, especially because this trail accesses downtown Sarasota, which gives you access to the beach via bike, and also gives you access to downtown Venice. So we're talking about insurance, right? How much did my insurance go up? Well, I'm going to show you my insurance bill from last year to show you what the insurance premium was at that point and what the new insurance premium is. And how much did it go up? It went up about 57%. There's two parts to insurance. The insurance has a portion for hurricane and it has a portion for non-hurricane insurance. So obviously, that one's easy to figure out. Yeah, to figure out how much did the insurance portion go up for hurricane and how much did it go up for non-hurricane related issues. So the hurricane portion, if I were to do the math right now, the hurricane portion went up about 73%. I'm in Sarasota right now. Big fan of Sarasota, Central West Coast. The hurricane, we didn't have a lot of damage here. I mean, we had some. I mean, the wind came, and in my neighborhood, a lot of trees came down, and we've had some areas where they're downtown, high rises, some broken glass, and a little bit. But Sarasota, for the most part, was well preserved, as it typically has been for the time period I've lived here. We really haven't had a lot of hurricane damage. But I've gone through a lot of hurricanes, and I've prepared for a lot of hurricanes. And of course, insurance is a big aspect, especially if you're thinking of moving to Florida. And how much is that insurance policy going to cost me? So you can see my new insurance policy is $5,900, which has increased, like I said, overall about 57%. And what does that mean? Well, here's the challenge with that right now. Let's just say there's a mortgage on that property and that insurance went up. Well, how much is that going to increase my mortgage payment, right? Well, the difference has to be paid. And typically, if you have a mortgage on a property, your mortgage is escrowed. So your lender, in essence, pays your bills for you. They pay your property taxes, they pay your insurance, and they collect that from you on a monthly basis. So you have an escrow account, your escrow account pays for your insurance, pays for your property taxes. So what happens when your property taxes go way up, right? Well, your mortgage payment's gonna go up too. And this is how that's gonna work out. When it's time to pay for your insurance, your lender will pay for that, but you may have an escrow shortage at that point to pay your mortgage. And therefore the lender is gonna normally give you two options. They're going to either ask you to pay that difference up front, which in this case, we're looking at a couple $1,000s, or they will extend it over the term of a year. So what would that mean if, assuming I have a mortgage payment? It means that my mortgage payment just went up about $173 a month, just for insurance only. Now, that could be very problematic. Let's just say I'm on a fixed income, and all of a sudden my housing expense just went up $173, and it's something that's hard to negotiate down. What do? I mean, if I'm on a fixed income, all of a sudden I have another $173 a month in expenses, that could hurt. Now I'm certainly very fortunate. I am independent, I'm self-employed, and as such I only have to work hard. I only work part-time. I only work half-time, should I say, which is 9 in the morning till 9 at night, half-time, 6 days a week. And I have the potential to earn as much as I can, and I'm certainly grateful for that opportunity, but not everyone has that opportunity, especially if you're moving to Florida and you have a job and you're looking at what your expenses are and how much insurance is going to cost. Well, there's a few ideas with insurance when you're looking at what's possible. Now, the first thing is the home that you purchase when you're buying insurance is a big factor on how much your insurance is going to cost. So when you buy a property here in Florida, the first thing you want to do is you want to get a inspection done on it, and you want a wind mitigation report for the roof, and you also want a 4-point inspection. Now those cost typically about $350 just for those two reports in order to purchase a property. Now those go to your insurance person who you're going to get insurance from, and from that they're able to quote you insurance. That tells them how old the roof is, what the condition of the property is, and that has a big impact on what you're going to pay for insurance. So it's necessary to get those reports done before you get asked for quotes for insurance. If you're buying an existing home, you can ask the owner if they have a 4-point inspection or wind mitigation report, which is going to be helpful to price out insurance, because that insurance is going to have an impact on what your monthly payment is if you're securing a mortgage, right? So look at getting those reports done. So what are the variables in the cost of insurance? Well, obviously the age of the house has a big impact on it, the construction of the house, the type of roof, the age of the roof, the quality of construction, all that's figured in the inspection report that you provide your insurance company. Now, I recently called my insurance agent, and what's interesting, right off the conversation, she's able to also look at the county site, because there is one concern that I have with my house. Now, the house that I live in, the roof was replaced in 2001. Right now, the roof needs to be replaced again, and it's obvious when you see the roof, there's some shingles that are starting to curl and it needs a new roof. This is impacting the cost of my homeowner's insurance. Now, if I had a brand new roof on my home, which I intend to do later on, the insurance would go down. And the way I would be able to do that is after I secure a new roof on my property, I could get a new wind mitigation report and provide that to my insurance company, and they can price quote and price shop and find me a better value on insurance. Now, I think there's a big myth there that it's impossible to get insurance in Florida, and I'm not having that problem at all. In fact, my insurance company said that there's 10 different carriers that they could shop the insurance to get me a quote. But what the challenge being is when you have a home like my home, it's an older home, it was built in 1986, it has a roof that was replaced in 2001, those two factors alone limit my possibility on what I can get, who will insure my insurance. So obviously when you are limited on who can insure your property, you're going to pay more for it, more for your homeowner's insurance. So that's one variable that I'm looking at that I can bring my insurance down, is putting a new roof on. Just putting a new roof on, I estimate, according to my insurance agent, my insurance would go down about $800 a year. So that's one idea. So when you're looking for buying property here in Florida, that's a big consideration of what's the insurance going to cost, and thus there are factors that have an impact. So if you're looking for an existing home, typically you're going to pay more for insurance in Florida because of that 4-point inspection and the wind mitigation report. If the house needs a lot of work, you're going to pay more than anyone else. So what are some other variables about insurance? Now I want to show you my insurance policy again, and I want to show you one thing that I did. Now I have a real high deductible on my insurance. So even though the new quote is for $5,900 for the annual policy, note that that's with a 10% hurricane deductible. Now that's normally not normal. Typically people keep that at a 2%, but I increased that deductible because I wanted to keep my insurance as low as I could. So let's just say I didn't opt for that option. Let's just say that I kept it at 2% hurricane deductible and not 10%. What would the cost of my insurance be at that point? It would be about $7,300. So, there's a big difference in the premium without that deductible, but here's the challenge. You can see that based on the construction value of my property, that 10% equals a $36,000 deductible. So if a hurricane were to destroy my property, I'm liable for that first $36,000. Now that gets back down to this new roof that I need, right? So I need a new roof. So hurricane comes in, causes damage to my roof. It's a hurricane related issue. A new roof on my house, I just quoted it, it's going to be about $25,000. So again, even with that deductible and a hurricane and insured for a hurricane, I still don't have any protection with that insurance. So why would I carry such a high deductible on my homeowner's insurance? Well, for me personally, I remember reading a book, and a favorite book of mine, an oldie but a goodie, called Wealth Without Risk by Charles Givens. And in that book, he talks a lot about how you spend money, and the big aspect of that book is talking about deductibles when you buy insurance. So as I mentioned, the difference in quote on the deductible for my insurance for that 10% figure is over $1,000. Now I've lived in Florida, I've owned a house since I was 21 years old, and I've opted always to carry a high deductible on my insurance. And I'll tell you, I've come out ahead with that one because I haven't had any claims, and given the amount that I've saved on that high deductible, if I had to pay that full deductible at this point on a hurricane, I would in essence have saved that much money doing so. So it's calculated risk and what you're comfortable with. I feel like I can stomach the $36,000 deductible if a hurricane hit to keep my insurance policy down. So that's an option. If you're thinking insurance is too high, look about your calculated risk on how much the insurance could be if you raised your deductibles. That's the first thing that I look at, is not the quote. What's the quote, and what's the quote based on the different deductibles? Because that will have an impact on your monthly payment if you're looking to secure financing on property. Now, another factor on insurance is, do you even need insurance, right? Now, if you're securing financing with a mortgage, the answer is yes, you don't have a choice. A lender's gonna, in most cases, I've never seen a lender actually, I would say almost in every case, a lender is gonna require you to carry insurance on the property, homeowners insurance. So why do they do that? It protects them. If they are loaning you money on an asset and a hurricane were to destroy that property, they need to know that their asset's protected on the money that they loaned you for that asset. So a lender is typically going to always, in my case, require homeowners insurance on a property here in Florida. So what are some nuances there? Well, let's just say that you buy a property and you pay cash. Do you really need insurance on that property? And I'll give you an example where I would not use insurance. Now, I bought a property in our area on Venice Island way back when, and it was a little 2-bedroom, 1-bath house, less than 900 square feet, and I paid about $215. I had a mortgage on it of about $170. Now, after I purchased this property, about a year later, the house across the street went on the market for $595, something like that. And it was a big house and a real ugly house at that, what I say. And the house sold. And when it sold, they tore the house down. And I realized my property, my lot, was actually even nicer than their lot because I was closer to the beach. And even though I had a 900 square foot home and they had a 3,000 square foot home, they destroyed that house to buy the dirt. So to me, the dirt was worth over $500,000. And even though I paid much less for it, the value of the property, the value of the dirt was actually more than what the house was worth. And I figured out that if the hurricane were to blow that house away, the value wouldn't change at all. So if that's the case, why do I even need insurance? Well, I didn't have a choice. I had a mortgage on the property, so I needed to pay insurance, even though that if a hurricane were to destroy that home, the value of that property really wouldn't change. Now, I know that seems a little awkward in our marketplace, but that's Florida. We have seen a lot of appreciation in Florida, especially when you buy the right piece of dirt. And I think I've done so in the house that I live in right now, because I'm living on an acre of land that's close to Sarasota, downtown Sarasota. So the property is worth a lot of money. And if a hurricane were to destroy my home, the value of my dirt is quite a bit and would cover that. So again, in certain situations, insurance might not be necessary. And it's all about calculated risk, of course, right? So do you want to take that calculation of risk? Well, when the insurance seems like it's too high, maybe you do. And that's an option. But obviously, I think the best option is to look at your deductibles and say, how can I minimize the expense? Because if I'm able to take that calculated risk and pay for the insurance, pay for that deductible myself out of my pocket, and gamble that I'm not going to have a claim, that could be a better option and save you money in the long run. So is the insurance high here in Florida? Did it go up a lot? Yes. Is that going to hurt our values? Yeah, it could. It could certainly hurt if you're looking to secure financing, because your mortgage payment just went up. And again, look at what's possible to keep your insurance down by getting a 4-point inspection on the property and maybe even doing some repairs. Like in my case, a new roof would bring the insurance down, keep the deductible down and such. But let's just say, hey, the insurance just feels too high. Well, it's all the risk of living in Florida. Right now, I was born and raised in California, where we had earthquakes. We had no warning of earthquakes, and I remember running through the kitchen with dishes and canned goods flying at me as I tried to dive under the kitchen table, and my parents screaming for me. And we had no warning of that coming, but I think it all depends on where you live and what are the obstacles with that. And obviously, Florida, we have hurricanes, and with that, if you need insurance, you have to look at what the variables are with that in Florida. Yet it is my opinion that our property taxes in Florida are low. Now, I think that's all subjective to where you're coming from. I was buying a house in Connecticut in a little tiny home, and I was absolutely blown away how much property taxes are. I know in Florida we get used to paying taxes, and when I go outside of my bubble, outside of Florida, and I look at other parts of the country, what property taxes are, I think we are certainly very lucky here. And some people aren't going to agree with me. It all depends on where you're at. Now, I'm in Sarasota, Florida, and I think one factor that keeps our property taxes low, or it seems like a good value for our area, is we have a lot of expensive housing here in Florida. We have barrier islands, and we have a lot of mega $1 million properties, and they all paid property tax based on their home assessed value. So when you have a castle on the beach, you're going to have a high assessed value, and your taxes are going to be higher. Now, all those higher property taxes in Sarasota gives us a real good quality life, like this bike trail that we have right here, And my property taxes, I think, are quite reasonable compared to other parts of the country. So when you evaluate taxes, insurance, put that in a mortgage payment, those are all factors on the cost of living. Did the cost of living go up in Florida? It did. That hurricane cost all of us a great deal. Whether you have a mortgage or not, your insurance went up. And it went up a lot last year because we had a devastating hurricane. Do the hurricanes happen all the time? No. And of course, it's subjective. You don't know, that's just called living, right? You don't know what to expect, but you want to make sure that you're insured against the worst possible scenario and that you're able to afford that lifestyle. So yes, insurance went up. It's changed. It's going to change our market a little bit, but we're still in Florida. We still have this amazing quality of life, and I still think it's a great place to live. And especially if you want a bike to beach community, find a house here on Legacy Trail. So in closing, my name again, Troy Funk, F-U-N-K, Funk. I am a licensed Florida real estate broker. And if you're looking for real estate in my area, certainly reach out to me. Check out my website, troyfunk.com. You can start looking at properties all over the state of Florida, especially if you're looking for new construction or pre-construction. And if I've been helpful to you, I've added value, hit that like button, hit the subscribe button, and I look forward to seeing you on my next video.